This is SFNet Presents In the Know with host Mary Bobrow, sponsored by Tiger Capital Group.
Hello and welcome to SFNet Presents In the Know. I'm your host, Barry Bobrow, Managing Director for Regions Business Capital. Through the In the Know podcast, I've been bringing a series of conversations with thought leaders on important topics impacting secured lending and asset-based lending markets. Today, we have a first for the In the Know podcast, a second-time guest. David Silverman, who joined me in the second of the series in 2022, is back for more. David's a Senior Director at Fitch Ratings Corporate Group, where he covers a diverse set of retailers within sectors, including specialty apparel and hardlines. David and his work have been widely quoted in various trade publications, including Women's Wear Daily. He began his career as an analyst at Deutsche Bank Asset Management, covering retail sector equities across the firm's mid and large cap mutual funds. He then recommended retail sector investments for a proprietary trading platform at Susquehanna International. And more recently, David has bolstered his retail industry knowledge through financial planning roles at J. Crew and the Children's Place. Before I get to the discussion, which is really a great one for the ABL market, the asset-based market is heavily weighted, I would say littered with consumer and retail-related companies. All of them have been going through dramatic changes over the last couple of decades because of the way consumers think and behave. The internet and the need to compete in the omnichannel have given way to the need to work with AI, and David's got a bird's eye view on all of that. Before I get to that, I have an important disclaimer. Statements and opinions of individual speakers in this podcast are their own, do not necessarily reflect the opinions of Regions, Secured Finance Network, or Fitch. Information provided should not be relied on or interpreted as accounting, financial planning, investment, legal, or tax advice, and reference to websites for companies should not be construed as an endorsement or recommendation. Consult your tax and professionals for advice. One more program note, I really want to thank Tiger Group for agreeing to be the sponsor of the podcast. We all value the work that Tiger does in our industry, and now I have them even more valuable because of their support for the In the Know podcast. All right, all that out of the way. David, welcome back. You were the second victim of this, but great to have you, and I'm looking forward to today's discussion.
I am as well.
David, can you, from the perch you're sitting on, looking at all the retailers, the public ones especially, just give us a bit of a primer on the changing customer in their preference over the last couple of decades. What's driving so much change in the retail world?
Yeah, we've seen a lot of change over the last, call it 30 years. It was about 30 years ago that the e-commerce channel was born, and we saw that grow alongside kind of continued growth in physical retail. About 10 to 15 years ago, companies started thinking about their e-commerce business less as an incremental store and more as a part of a broader ecosystem. And we saw omnichannel innovations like buy online, pick up in store, or ship from store, initiatives like that. We have moved over the last several years to really unified commerce. The pace of change has really accelerated over the last number of years. And today, across many brands, consumers expect a truly seamless shopping experience across the physical retail platform, as well as a company's digital platforms, inclusive of website and apps. Consumers want to be able to research products and see what inventory is available. Consumers want to know that their purchase history and loyalty data and other types of data move with them across platforms, pricing and promotions. All of that should be pretty visible to consumers as they move across platforms. They also, back to that idea of that buy online, pick up in store, they want an increasing number of options around where are they getting the inventory and how can they pick it up? How can they make returns?
David, given all of that, what would you say are the success factors for retailers? How have they evolved?
Yeah, I like to start this conversation with a reminder that retailers don't sell unique products. What one retailer sells is sold by a number of other retailers in a market or online, either the exact same product or a reasonable facsimile. As a consequence, the core of retail success really is an understanding of the relationship between retailer and customer. What are the specific attributes of the retailer that makes that the retailer that the customers choose? Thinking about a combination of product offering, pricing, customer shopping experience, brand positioning. What is that combination that is unique to that retailer that a consumer finds compelling? So what's a real kind of key to success, I think, is a retailer understanding that special relationship that it has with a customer, and using that special relationship or keeping that special relationship in mind as it approaches investment decisions, and as it approaches kind of which aspects of this retail model make the most sense as focus areas. There's a lot of interesting stuff out there. We've got unified commerce innovations. We've got marketplaces that the big retailers are starting. There are interesting partnerships that are out there. The whole marketing world is changing. The loyalty program world is changing. We've got agentic shopping on the horizon. Not every investment is right for every retailer, particularly given that a lot of companies have limited bandwidths, limited finances. So again, the real critical factor for success in my view is for a retailer to understand who they are, what they represent to consumers, and also who they aren't and what they don't represent to consumers, and using that information as they're approaching decisions on where to invest and how to invest.
There's a lot we could go on through that, but I want to talk about the current economic environment. There's a lot of people talking about a K-shaped economy, haves and have-nots. So we have a lot of uncertainty. We have tariffs. We have supply chain shocks. How are consumers and retailers adapting to this current set of factors?
Yeah, look, I've been surprised how well retail sales have held up the last couple of years after that initial surge in 2020, 2021, as consumers change behavior in the pandemic. It's been surprising to us that retail sales overall have continued to grow kind of on top of those initial gains. It's not every category. We can talk about some of the categories that have been a bit more challenged. So why is that? You referenced the K-shaped economy, and we believe that certainly exists. And what we have to remember as we're thinking about the K-shaped economy is that the bulk of retail spending, and certainly the vast majority of discretionary retail sales, are done by consumers that are in the upper part of that K-shape. So yes, everybody's dealing with inflation. Consumer sentiment has been challenged kind of across the system. That upper end consumer has enjoyed real wage growth, has enjoyed relatively low unemployment, and critically has enjoyed financial asset gains and housing asset price gains, which have more than mitigated any of the concerns that they've had. The other factor that's held up retail sales in our view is that Americans like to shop. And
it's what we do best.
It is what we do best. And look, some of the discretionary categories we've seen a bit of a fall off on, particularly the ones that performed incredibly well during the pandemic, as we've kind of seen a reset of replacement cycles and upgrade cycles. But Americans continue to like to buy things for themselves, and one might even say, one would say, we continue to shop despite consumer sentiment concerns. I might argue that some people are shopping because of consumer sentiment concerns. It just makes us feel better to, buy a little bit of something.
Retail therapy, yeah.
Exactly, retail therapy. From the retailer standpoint, for the last couple of years, I would start kind of my annual retail outlook with, well, hopefully after the last few kind of wild and crazy years, this year will be a little bit more calm. I've stopped saying that. And it's because complexity and volatility are, now seem to be part of the business model. So one of the things that we talk to all of our retailers about is how to think about nimbleness, how to think about agility, and how to think about, the ability to have decisions that are a bit malleable, based on changes that you see in the operating environment. Because one thing's for certain is that there's a lot of uncertainty. So,
How does that how does that thought interact with the tariff regime, Liberation Day, and subsequent tariffs? Have you seen a movement towards more onshore sourcing, or at least diversifying away from some of the countries that have higher tariff areas?
The answer to your first question is no. We have seen no onshoring, nor frankly did we expect to see any, quite frankly. Although the cost of manufacturing and importing from abroad has increased, that cost is still lower than manufacturing in the US. It would take a significantly higher tariff scheme than where we are today, kind of across categories, to make the onshoring versus offshoring decision tighter, if you will. We have certainly seen, to your point about shifting supply chains, we've certainly seen retailers do that. Good news from that aspect is that a lot of retailers have spent the last couple of years kind of rethinking about agility and redundancy in their supply chain because of the post-pandemic supply chain challenges that we saw. So that muscle is one that retailers were already working with and continued to work with that last year. Where it's gotten a bit confusing, quite frankly, over the last year, is that we saw a lot of retailers make some shifts in their supply chain, and then the tariff policy would evolve, and they'd need to make a shift again. So, some maybe stopped making some of those shifts. We've certainly seen these retailers work through other mitigation activities. They're negotiating with their vendors, and the bigger the retailer is, the harder they're able to negotiate with the vendors. They are passing some prices on. Some are more obvious, and some are more subtle as they work through their data analytics and figure out where prices might be less elastic. And then finally, a lot of retailers have mitigated some of these price increases through just kind of in-house cost reduction and expense management in other areas to save the P&L.
David, you talked about the high end and the luxury. Talk about the middle to low end of retail, and how is it different for them, different consumer, different set of reactions that they need to deal with?
I would almost say the middle and the lower end are a bit different in themselves. The middle is that confluence of those that are exposed to housing prices, that are exposed to financial assets, which have all been kind of structurally rising over the last few years, and they're doing okay. The low end, unfortunately is kind of bearing the brunt from a impact on budget standpoint of the inflation that we've seen over the last few years, and the gas prices the gas price increases that we've seen over the last couple of months. That's a group that is always mindful of budgets, and unfortunately, a lot of them are paycheck to paycheck, and that kind of financial strain that in a way is almost a part of their overall budgeting process has just gotten worse over the last couple of years. So I think we see that a little bit in some of the kind of the low end retailers and some of the discretionary trends. But again, cohort is typically not responsible for a significant amount of the discretionary retail spend that we're looking at on a regular basis.
Interesting. David, you referenced some of the partnerships and some of the other ideas that retailers are trying that are different. Can you give us some examples?
Sure. In terms of the partnership, this era of retail is creating some very odd bedfellows between what we would historically think of as competitors. It kind of all started with Amazon and their advent of the marketplace approach. For the last several years,
We're big users of marketplace. Let me tell you, cleaned out our garage that way.
Yeah. Yeah. So, over 50%, as an example, over 50% of what Amazon sells on its website is inventory that Amazon doesn't own. It's third party. It's third party product. And other retailers have certainly taken notice, and companies like Walmart and Target, some of the leading department stores, and some of the kind of category big box leaders are implementing, experimenting with marketplaces of their own. So that's the first kind of partnership. Alongside that, some of these companies that have great supply chain and distribution infrastructure are offering B2B services to smaller retailers so that retailers can think about outsourcing some of this functionality, particularly if they're participating in the marketplace. Then coming along with that is digital advertising. There are a lot of eyeballs on Amazon.com, Walmart.com, Macy's.com, and there's a high margin opportunity for these companies to sell advertising, and retailers and frankly non-retailers are taking advantage of that. So you put all that together, and there's a lot of data around what's sold, how it's shipped, what customers are doing, what they're looking at. And that means that all these companies that are offering these other services can also offer business intelligence, data analytics type of products. So there are a lot of interesting kind of B2B services that are taking the form of partnerships in this space, and smaller retailers have to think about how they want their brand to show up, and from a business operations standpoint, where it makes sense to insource versus.
I want to tell us a quick story, and this is actually what gave me rise to call you a little back. So I was watching my favorite school, the University of Michigan, play in the Final Four basketball, which they won. And I said, boy, those coaches, I like those quarter zip pullovers that they have. I want one. So I went to Amazon, and while I was watching the game, and I put in what it looked like, and they didn't have anything that was quite like it. And then I went to Google, and I tried the same thing. And finally, I just went to ChatGPT, and I said, I'm watching Michigan play in the Final Four. I want something like what the coaches are wearing. That was all I prompted. And it thought for about 2 seconds and said, the model you're looking for isn't exactly available for retail yet, but here's the closest we found. And so it was an AI search, I guess, almost an agentic. I mean, that to me opens up a whole new idea of how does a retailer get to market? How do they manage AI?
Yeah, so I feel like we're moving into what is almost stage 3 of the impact of generative AI on retail. In the first couple of years, retailers were really kind of back of the house focused. They were nervous, understandably so, about AI applications that would touch the consumer, because we were still learning about what AI could do, and hallucinations, and all those risks. But we did see some real efficiencies in some of the task oriented areas: labor management, inventory allocation, warehouse processes, supplier relationship management. And if anybody that's listening ever has the opportunity to visit an automated Amazon DC or a Walmart DC, do it. It's fascinating how AI can impact some of these distribution functions. More recently, the usage of AI has moved over to applications in running the business aspects that are closer to the company, or sorry, closer to the consumer. Marketing analytics and messaging, customer service assistant like chatbots, helping plan store operations, doing real estate analysis for portfolio reshaping or new stores. Look, it's a highly competitive industry, so there's a lot of analytical work that retailers do. There's a lot of what ifs. There's a lot of what about that's. AI models can help retailers think about these kind of hypothetical situations and potential outcomes. So now we get to your example, which is I think of it a little bit as stage 3. Walmart kind of kicked off the year at the NRF conference, announcing its partnership with Gemini, which is Google's AI functionality, and we're moving to agentic commerce. Consumers are engaging more and more in conversations with AI, and particularly as those conversations are kind of replacing, let's say, historic search on Google. How do those give rise to retail purchasing opportunities? And as we think about that, how do retailers then position themselves to capture potential market share? So right now, we've seen announcements from Walmart and some of the other big retailers that are partnering with these AI providers to share data, which will lead to product suggestions as part of AI conversations. So the retailers that are sharing the data and offering those product ideas will be in the best position within the conversation to make the sale. I think we'll see over the next couple of years this idea of agentic commerce and retailers and purchasing opportunities kind of insert themselves in conversations. There are a lot of questions about how to do this, how to do this in the most appropriate way, how to do this in a way that the customer knows that they're being sold something without the customer being offended that they're sold something. And then certainly, I think it's not a surprise that all these big retailers are trying to partner with the AI models, because just like you want to be the first result in search function, you want to be the first result. You want to be kind of top of mind if there's a revenue opportunity as a consumer is having an AI conversation.
That's really interesting. I guess we'll see is the answer. David, one more question. You're the analyst here. What's keeping you up at night with respect to retail? What are the big risks that you're most focused on?
I do think the ongoing kind of volatility, as I mentioned before, and kind of not knowing what tomorrow will bring. There's one war out there that we're involved in. There are other global conflicts on the horizon. There's an evolving tariff policy. There's a lot happening. There are, AI is a big opportunity for a lot of companies, but there are a lot of questions in the medium and longer term about how AI could change the workforce. And to the extent that there's a change in the workforce, there's a change in consumer shopping ability. So what keeps me up at night in a way is the unknown of everything and the volatility that we continue to see. As I mentioned before, retail sales have, not every category, but retail sales have held up relatively well, waiting for a potential shoe to drop as the consumer kind of finally gives up is a question that we keep debating.
David, thanks so much for joining. Well, you'll have to become my third time, Victor, but we'll get you back again. And thanks again for your comments.
I look forward to it. Thanks.